I think if the Democrats win the House and maybe even the Senate too, but though that looks less likely, I think there's a chance that all of that momentum that came out of the last election 2 years ago could stall pretty quick.
Hey guys, look at all the reflections. It's like you can see my computer, you can see me, and then you can see the 10-ounce bar of silver, and then you can see it again and again and again, and it kind of goes on forever. Anyways, you can get this 10-ounce bar of silver at spot price. Just go to sdbullion.com/EJ, and you'll get your 10-ounce bar of silver at spot price, which means you're not paying any premium. It's pretty amazing. And what's really cool is if you guys take advantage of the special offer SD Bullion is making, you'll be supporting finance and liberty along the way. I hope you guys love this interview. And remember to go to sdbullion.com/EJ to get your 10-ounce bar of silver at spot price.
Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and back with us today is Craig Hemke from the TF Metals Report. Craig, aka Turd Ferguson, thank you so much for joining us today.
Hey Elijah, it's a pleasure. I don't know where the time goes, my friend, but we're wrapping up the year and let's see where we go from here.
Definitely. It's already November. The midterms are just a day away. We're recording this on Monday, November 5th. Now, last time we had you on, you were talking about the likelihood of the Democrats taking the House, leaving the Senate to the Republicans. It looks like that's what's going to happen. We don't know yet, obviously, but if that happens, what you said last time was that the Democrats winning the House would really impact business and consumer confidence, which would weaken the dollar and be bullish for precious metals. Can you give us an update on this? Where do you see this all playing out in the days and weeks ahead?
Well, I think that's still the most likely thing to happen. I will see come Tuesday night if that's in fact the case. I mean, there are a lot of polls out there that say it could really go either way. It seems to be the U.S. House that's in play, but it doesn't really matter which one. If the Democrats were to take control of the House, that means that every committee head, every committee chairman, chairwoman will become a Democrat instead of a Republican. And any agenda that Trump has, be it fiscal, immigration, his tariffs and stuff like that, though a lot of that can be done by fiat and executive order, a lot of the Trump agenda will stall. And so when I say this, I'm kind of referring back to where we were 2 years ago. If you recall, the economy was just kind of bumping along. Even the official data was at 2% maybe growth and less. Nothing really exciting happening. And then once Trump was elected, it seems like this narrative was immediately pushed that this was really going to be good for the economy. It was going to, create jobs. The dollar was going to soar because interest rates were going to go up and all this kind of stuff. And hey, look, to some extent that's true. I mean, if you take the government statistics for what they are purported to be, I mean, GDP growth is now over 3% pretty consistently, and all the other factors that go with it. And consumer confidence is strong as well, which is kind of a little bit of a hindsight indicator, that people are like, yeah, things have been going great, so I think they'll keep going great. And so what I would imagine, Elijah, is if the Democrats win control of the House, whatever tax cuts, that kind of stuff that Trump has been talking about, I mean, that's going out the window. Any changes to the Obamacare legislation, which is just, healthcare costs are just almost getting to be insurmountable for people. Any changes to that, that's going out the window. And I think that's going to really begin to have an impact, maybe almost as soon as the end of this quarter and into next year. And then you start thinking about the investigations that are going to come. Like I said, every Democrat will now control every House committee, And probably every single House committee will have some investigation of Trump that they think falls under their jurisdiction. And so you're going to go from, Trump kind of, in a sense, clear sailing and picking up Republican support where he needs it and getting stuff done to really nothing, and he'll become, in a sense, if some of these investigations take hold and, the media is going to run with it. Some of these Republicans will probably start straying away from him, thinking that not necessarily he's radioactive, but they'll think, I don't know if I want to support this guy, as they think politically. And so I think everything could really grind to a halt as soon as early next year. And then you got everything else that's going on, just a natural business cycle, the yield curve inverting, these high interest rates rippling through the economy, or not high, but relatively high given where they were. That affects car sales, that affects home sales, that affects credit card debt. And there's a lot of things then that begin to stack against the U.S. economy in 2019. And then all of a sudden, we're talking about whether the Fed should stop hiking the Fed funds rate and whether the Fed should maybe start cutting the Fed funds rate. All of that weakens the dollar, and in turn, that maybe turns things back into a little shinier situation, if you will, for the precious metals.
Definitely. Now, we've seen a bit of a bounce over the last month for precious metals, especially gold.
Yeah.
Why do you think this is? Some people are pointing to interest rates rising. What is your perspective?
Yeah, the most odd development that I didn't see coming at all this year. I mean, I was on the record. I thought by this time in the year, we'd be pushing 1375, 1385, kind of the higher end of what had been a bull that was forming on the chart. And I thought, man, we go back to March, man, I thought maybe that was a low ball number. Things were looking great. And what I failed to anticipate controlling gold prices through the middle part of the year was the Chinese yuan, specifically the value of the yuan versus the dollar. And it really almost took a tick for tick basis to this correlation beginning in about April and really picking up over the summer, where really all you needed to know on a daily basis, if you were trying to figure out where gold was which way the yuan versus the dollar was moving. So now that kind of broke a little bit. And a kind of a relative gap opened up in October where the yuan continued to fall versus the dollar, but gold rallied, 3-4% from what was a pretty heavily technically oversold position. And you had a whole bunch of hedge fund money, stuff like that was short. And so now here we are in this kind of no man's land, in a sense, between maybe 1230 and 1240. And I mean no man's land because you've had this bounce. And you want to think that we can keep going, but at the same time, you have to worry that it's going to roll back over too. I'd like to think that's not the case, so that now going forward, what the gold market is starting to, I guess, anticipate is maybe these changes that we discussed. The stock market got weak in October. Trump started talking about whether Powell was raising rates too quickly and that kind of stuff. And people started wondering if maybe, hey, maybe 2019 is going to be different. I think that's going to be the key now for both gold and silver. If we can get through these current levels where we're at, Elijah, which is around, like I said, 1240, 1230 in gold, we can start moving through 1240. I think it'd be pretty easy to get through the next Fed meeting in December, get through the tax loss selling, and then rally into year end, like we've done each of the last 3 years, and then into early January. If that's the case, we could still end up near 1,300 on the year, which would be about flat, which is about, at this point, that's all the stock market people are hoping for too, right? So that, the way this year ends could still, not be as negative as it looked like it was going to be a couple of months ago. And then, like I said, that could set us up for some rising momentum and kind of a change of attitude in the first quarter.
Yeah, and really getting into the stock market, over October we did see that sell-off. We just saw on October 29th, last Monday, a lower low for the stock market if you look at the S&P and also the Dow. Is this the beginning of a bigger downtrend?
I tell you what, Elijah, I think not to focus too much on, right now, but I think tomorrow's going to have a lot to do with that. Again, just going back to tomorrow being Tuesday in the elections, I should say, go back to what happened exactly 2 years ago. Because remember, we were told, man, it was if Trump was elected, it was going to be a disaster, right? That was the story the media was running with, even CNBC and Bloomberg and everybody else. Oh, God, yeah, he's, the guy's a loose cannon. Yeah, money's going to flee the U.S., the stock market's going to crash and all that kind of stuff. And as election results came in on that night 2 years ago, that's exactly what happened. When I went to bed that night, Trump looked like he was all but assured to win. And the Dow was down like 600 points, at least the Dow futures were. And everybody thought, oh, boy, here we go. I woke up the next morning and we're down like 100. And then by the end of the day, we're green. And this narrative was put out that, no, instead, Trump's great, man. This is going to be awesome. And, in hindsight, I guess you can kind of see what it's done for confidence with the tax cuts and things like that. And the economy has seemingly at least gotten a little bit better than it was back during Obama. So anyway, tying this all back together like we did earlier, I think if the Democrats win the House and maybe even the Senate too, but though that looks less likely, I think there's a chance that all of that momentum that came out of the last election 2 years ago could stall pretty quick. And that could ripple into the stock market as soon as Wednesday, really. I mean, if you think of the opposite reaction to what we got 2 years ago. So, I don't think that the stock market is out of the woods by any means. It remains below, the S&P remains below its 200-day moving average. The damage done in that 10% drop in October, still there on the chart for everyone to see. And, if it does roll over again and we start making new lows for the year, below those lows that we saw back in February and March, it could get kind of dicey. And that would help gold too. So I think all eyes, like we began this discussion, all eyes are and should be on the U.S. election results tomorrow. And then people need to start thinking ahead as to what it might all mean.
Definitely. Now, if you look at the chart essentially right before the election, the Dow, if you go from right now to right before the election, it's up about over 7,000 points. So are you saying that if the Democrats win the House, that essentially that 7,000 point increase, that increase in confidence about the economy could be taken away?
Well, I think everybody's been thinking about that stuff now for years, Elijah. We're like, oh boy, yeah, the stock market, how they're keeping it together. And instead, it just keeps going up, year after year. So I don't know if you could take the whole 7,000 points out. Because there's all these trillions and trillions of dollar and euro and yen that have been created over the last 10 years that just continues to slosh around the planet looking for a home. But there could be, again, a significant correction. If you go back in the period before Trump's election, 2015 was not a very good year. I mean, equity markets kind of went sideways for a couple of years there and then all of a sudden took off. So if anything, we could be back into a pattern of just kind of going sideways, in a range within the stock market. And that, that would do a lot to deflate some confidence too, because the stock market is kind of a confidence indicator. If every quarter when the average guy or gal gets their 401k statement and they see it's up another 10%, that makes people feel a little bit better about things, make them think, hey, you know what, maybe I can afford a new washer and dryer. Maybe I'll buy that new car, that kind of stuff. And so when the stock market rolls over, that also impacts consumer confidence, if you will, and the general sentiment behind the economy. So we'll see. I don't know. I wouldn't expect, some 7,000 point crash. But like I said, if it just begins to wane, if people start to look ahead and think, oh, boy, maybe this is going to get pretty dicey next year with everything that's going to happen. And then you start making new lows for the year. I mean, the S&P can fall to 2,400 pretty quick. So we'll see. And again, all of that, I think, benefits gold and silver as we come out of the year, because what's baked in now is this, this dot plot that the FOMC gives us all the time. Oh, there's going to be 4 more rate hikes next year and maybe 3 more after that. Now, wait a second. That would put Fed funds at like 5%. Seriously? But that seems to be the prevailing sentiment. And then when that gets called into question, is when all of a sudden the dollar starts to drop and the metals start to rally again. And I think that's what we're looking at late this year and certainly into next.
Yeah, I mean, a lot of the people I've been talking to recently have been saying that, this narrative that we're going to see more rate hikes coming soon, it doesn't seem probable. It seems like we're going to see a reversal possibly in the rates and possibly even more QE.
Yeah, I think that's – look, why is the Fed in such a hurry to hike rates now anyway? right? I mean, there's still barely any inflation. There's barely any wage growth, but yet they're hiking as if, it's 1979 all over again. And I think really the only real rationale for it that I can see is that they're trying to give themselves their traditional wiggle room. When Fed funds were at zero or at 50 basis points, if the economy rolled over, what were they going to do? I mean, they were talking back then about negative interest rates, right? You don't hear that so much anymore because they've now built themselves up a cushion here at 2.5%, where if they want, they can start cutting to 2.25% and 2% and 1.5% again if a real crisis and meltdown develops. And I think that's really the main reason they've been hiking in the first place. So they're walking a fine line. And you look across the globe, what this strength in the dollar has done to emerging market countries, what it has done to China. So many equity markets global equity markets are now in bear market territory. They keep hiking. And if that continues to cause the dollar to rise, I mean, that's going to exacerbate all those problems. And so you put this all together and you look at gold, the way it's traded on the COMEX and, priced that way, and you see it at, $12.30 an ounce. That doesn't sound like a very bad deal. And as more people start to think that way, again, all of a sudden you get some of these speculators that have shorted COMEX gold. They start to cover, they start going back long, and all of a sudden things look and feel quite a bit different. That's at least what I'm hoping for.
Definitely. And now, kind of shifting gears a bit, I'd like to ask you something that I don't know if we've covered specifically on this channel before, but regarding investing precious metals, investing in precious metals, what's your favorite? What is your favorite medium?
I own, on a percentage basis, far more gold than I own silver. A lot of people buy silver and have bought it over the years, and I've bought it. Geez, I don't even remember when I bought my first silver. And I continue to buy it. That's about the only good thing I can say about the way prices have fallen and stayed down. I haven't run the cost basis on my personal silver hoard that sits at the bottom of a lake about 1,000 miles from here. But anyway, the last time I ran it, it was under $20 because I just keep on buying it. But on a percentage basis, I own far more gold because I'm more certain of the role that gold will have in the monetary system in the future, because that's the way history has worked. The gold has always been money. It has been money for millennia, and mankind has experimented with other forms of money. The least valuable of which being fiat currency, and the whole Western world is going down the same path it has gone down countless times before, where you convince people that the script is a substitute, that it is money. Well, then the politicians, they want more and more. They want their guns and butter at the same time, and so they have to, as we've now done in the U.S. since the 60s and 70s, they just print as much money as they can, so that they can, in this fairy tale land, that you can have both. It will fail eventually. The math is certain that will actually come. When, I don't know, but when it does, the world, as it has done every time in the past, will revert back to some sound money anchor. They'll say, okay, well, gosh, imagine that didn't work. Really? And they'll revert back to sound money. Gold will be, for certain, a part of that, because it always has been. Silver, though silver was money before gold was, I'd like to think it will be, but I don't, you don't know. I can say for certain that gold will be, and so I have more gold than anything else. And it's just imperative. Anybody that does own it, man, you can't buy the GLD and think, oh, I've got gold. No, you don't. And you can't have your gold at some unallocated account in Australia or some unallocated account in Australia and think, oh yeah, I've owned gold. No, you don't. The only gold you really own is the stuff you buy from Silver Doctors, and SD Bullion, the real thing. And you get it shipped to you. And you put it somewhere, at the bottom of a lake somewhere in a vault that only the combination of it. And when the time comes and you need it, you've got it. That's how you do it. That's how you provide financial protection, net worth protection against, when this all does ultimately fail, because it will. I mean, it didn't fail this year, but who knows, maybe next. That's how you got to do it. But you got to make sure in the forms of metal that you own, that you do actually own it. You can actually lay your two hands on it. When you need it.
Do you have a favorite coin, like a favorite gold coin?
I stick with the branded stuff. I guess I've been doing this long enough, Elijah. I've seen enough videos on YouTube of, gold foil wrapped tungsten and stuff like that. So I pay the premium and I buy the ASEs, the AGEs, the maples, stuff like that. If nobody's ever done it, if you're watching this video and you thought, I've heard this kind of story now for 8 or 10 years, and maybe eventually these people are going to be right. I think I'll buy myself a gold coin. Buy one, take delivery of it, and hold it in your hand, because all the gold that's ever been mined in history is still with us, right? It doesn't get used up. It doesn't, it's still there. So the gold coin that you buy, one, you hold it in your hand, you go, wow, this is cool because it's shiny, but it's also heavy because gold is really dense. And so in its little form of a coin, man, it's heavier than you think it should be. And even that alone makes you think, wow, this is cool. This is substantial. There's something significant here. And once you hold your first one and you start thinking about, I wonder where this gold was 500 years ago. And maybe it was in a hillside someplace, but maybe, 2,000 years ago, it was being passed as money in Rome. You don't know. And it's cool. So really, once you buy one, you're hooked. And then you realize the economic necessity of buying more than one in this current age. You get the fever pretty quick. And so, I buy the ASEs, the maples. I don't really like Philharmonics because they're skinny. They're more like wafers. And they don't really do it for. But that's what I stick with. I don't buy the buffaloes and stuff like that. I want the real thing. It just makes you feel better.
Awesome. Well, Craig Hemke, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, we've been, what is today? The 5th of November. We started this on a whim, man, at TF Metals Report 8 freaking years ago on the 11th November 2010. And if you'd have told me I'd still be doing this 8 years later, I didn't think I'd be doing it 8 days later, for crying out loud. But we do, and it's really cool what it's become. It's more a community than it is anything else. I give my analysis every day at tfmetalsreport.com, and I think people use it to time their physical purchases. Because if I can tell you, you might wait because I think price is going to fall $50. Well, you can buy, it pays for your premium and stuff. And so I think that's where there's value in what I do. But the real value in the site is all of the regulars that inhabit it and share their opinion and they're tracking everything around the world and keeping people up to date on the stories that matter. It's pretty cool. I'm just proud of everybody there. It's only $12 a month, so it's not like it's a deal breaker. So I encourage you, if you're interested in precious metals, if you see where it seems like this is all headed next year with the economy slowing down and prices rising again and interest picking up, now's the time to join. Again, tfmetalsreport.com.
All right. Once again, Craig Hemke, thank you so much for your time today.
Elijah, it's always a pleasure. Happy holidays, my friend. Have a great holiday season, and maybe we'll talk next year.
Definitely. You too.
This video was brought to you by HealingYourself.life. Click here to watch their latest interview with Dr. Jay Nielsen, off-grid medical doctor, where he discusses a safe and effective cure for inflammatory bowel disease.